Do you know what your next retirement birthday is? Not sure what we're talking about? Stick around. Hi, I'm Garrett Ray, financial planner here at the Wealth Guardians and the Ray Financial Group.
And I'm Brice Payne. You've entered The Vault, the Wealth Guardians video series on all things pertaining to retirement planning. In this episode, we're going to talk about all the retirement birthdays that you have and how you don't want to miss them. What else you don't want to miss are those like and subscribe buttons down below the screen there. Go ahead and click on those if you want to catch future episodes of The Vault with Doug, Garrett, and myself. Otherwise, let's go ahead and get into this, Garrett. Retirement birthdays.
Yeah, so retirement birthdays, what are we talking about? Well, there are several ages as you go through your phase of retirement that you need to be aware of. So what is this first retirement birthday we're talking about? Brice, something significant happens when we turn age 50. What happens to us?
Yes, so age 50 is now the magical year that we are allowed to make what are called catch-up contributions to our retirement accounts. Whether that's a 401k, an IRA, or a Roth. If you're younger than that, you're allowed to contribute a certain amount of money to those accounts each year. Once you turn 50, they up that a little bit. So really in 2024, they haven't changed this for 2025. To contribute to your IRA or your Roth, it's $7,000. But once you turn 50, it's now $8,000.
You get $1,000.
So it's really the catch-up is that $1,000, but the total that you can now contribute is $8,000. So be aware that when you have your retirement birthday of 50, and that's the first retirement birthday. That's the first one. Yep. That is a little bonus for you because you can contribute now more to your IRAs and your Roths and your 401ks than you previously were allowed to. That's number one.
That's right. So then we go 5 more years and we turn age 55, and something pretty significant happens to us if we have a 401k from either a company that we recently retired from or one that we're still working at. What's age 55?
The age 55, if any of these escaped somebody's radar, it's probably this one. Not a lot of people, even advisors we have encountered, had forgotten about this when they knew about it at some point. I hadn't thought about that. The age 55 rule is that we all know that there is another age when you can take, and we're going to talk about that one, when you can take distributions from your IRAs or your Roths. But what a lot of people don't realize is if you retire, say at age 54, from your
so you're an early retiree.
Early retiree, congratulations. But you know that you are going to start needing to take distributions from your retirement accounts to supplement that earned income that you're no longer going to get.
Yep.
You actually do not have to wait until the next birthday, which everyone's familiar with. You can take distributions from your 401k if it is your most recent 401k from the employer that you just retired from. If you are not working anymore and you have left it in your 401k.
That's right.
And that's a key point. A lot of people will say, well, I'm retired now. I want to start taking distributions from my accounts. I've heard of this age 55. Great. I'm going to roll over my money from my 401k to my IRA so my advisor can manage it for me, and I'll start taking distributions at age 55 next year.
Yeah.
You just made a mistake. Right. So you have to ask yourself.
Yeah. And so Brice and I, when we're sitting down with clients, if we do have folks who want to retire early and they have a relatively significant 401k, let's say they want to retire at 56. Well, they don't qualify for the next significant birthday we're going to talk about. We'd leave a portion of their monies in their most recent 401k so they can take distributions from that until they reach the next significant birthday, which we're going to talk about now, Brice, which is age 59 and a half. For most people, they're familiar with this.
Yeah.
What happens at 59 and a half?
So this is what you've been waiting for. You've been contributing to 401ks, IRAs, and Roths throughout your working career. You probably were aware of age 59 and a half is when you are no longer going to be penalized by the IRS for taking distributions from your 401ks, your IRAs, or your Roths.
Yep.
So that was always in the contract. It was built in there. You knew that if you were contributing to your IRA or your Roth, you are not going to touch it until 59 and a half.
Right.
And that's still the age. They haven't changed that. But once you're that age, that 10% penalty for touching those accounts early is now gone. You're still going to have to pay taxes on it. There's no way around that. Or that's a vault for another day, I guess. There can be some ways around that. But age 59 and a half is now where that 10% penalty is gone. and you can take distributions all that you want and not have to face that penalty. Taxes, yes. Penalties.
All right. Very good. So now we got 59 and a half covered. The next significant birthday that you're going to encounter is age 62. Now, 62, I would say, is an optional birthday.
Yes.
What the heck do I mean by that, Brice?
Well, you have the choice now. Once you've reached 62, kind of like 59 and a half was an option for you to take distributions from your IRAs if you wanted to. 62, you now have the option for the first time to file for your Social Security benefits.
That's right.
That does not mean that that is necessarily the time that you should. I know a lot of people out there say, I want to get my Social Security benefits as soon as I can.
Yeah.
Great. Power to you. You can do that. But it doesn't necessarily mean that it is the smartest long-term approach for you when it comes to Social Security filing strategy. So I encourage you to have a conversation with your financial planner. Hopefully you find one who is certified with the National Social Security Association, as we are here at the Wealth Guardians. But that is the soonest you can file for Social Security.
Absolutely. All right. So then we go 3 more years and we've gotten close to the age of 65. We have to consider something significant that's going to be part of our retirement as well at 65. And what is that?
Medicare.
Medicare. That's right.
You do not want to file for Medicare too late. So there is a 7-month window when you turn 65. It starts 3.5 months before you turn 65 and 3.5 months after you turn 65. That is when you want to file for Social Security. Now, if you have
Medicare.
Evolves. Now, if you have other health insurance that is qualified health insurance, no harm done.
Yep.
But there's nothing stopping you from filing for Medicare at the same time so that you are double covered and you have no chance of hitting that penalty. Because if you file for it too late and you had a uncovered area in there at 65 where you no longer had your employer's coverage and you didn't file for Social Security, Medicare, that is going to cost you dearly because they're going to add, 10%?
It's a 10% basically permanent fee.
Permanent, not just for that year. That's what you're paying on a monthly basis for your Medicare. They're going to increase it by 10% for the rest of your life.
The rest of your life.
That's huge.
So if you skipped, let's say 2 years went by and you just forgot for 2 years, that's now a 20% premium on what you otherwise would have paid for the rest of your life. So very significant.
Yeah. So there's 2 birthdays in here that I would say, do not let this one fall on the radar. And this age 65 is one of those 2 that you do not want to inadvertently forget about.
Okay.
Huge, significant birthday.
Absolutely. So then we go 1 more year, right? And then we've got kind of a window of birthdays. So it's somewhere between age 66 and 67. Something significant happens to us regarding Social Security, Brice, and what is that?
You go back to Social Security. Remember, we said that at 62 is the first time that you can file for Social Security.
Yep.
But there's that whole window. And at 66, for most people now it's 67. But if you were born before 1960, it's 66 and some. So we'll call it 67.
Yep.
That is now where you are eligible for your full retirement age benefits of Social Security.
Yep.
So if you file for Social Security before your full retirement age, before 67, you're not going to get 100% of your benefits that you're entitled to.
It's going to be reduced.
You're going to get a fraction of that.
Yep.
If you file after age 67, then you're going to get more than 100% of your benefits.
Yep.
Now, that really could just be a number. At 62, it's this number. At 63, it's this number. 64, it's this number. But there is something significant that happens at 67 besides them just calling it your full retirement age benefit.
Yep.
And that is that the earnings test no longer applies. And the earnings test is that if you're working, you're 63.
Okay.
You're now eligible to file for Social Security, and you decide you want to file early. You don't want to wait till your full retirement age. If you are younger than your full retirement age and you still have earned income, and now you filed for Social Security, the Social Security Administration is going to count how many earned income dollars you have.
Yep.
And they're going to withhold some of your Social Security benefits from you. Yep. That's not the end of the world. They're not keeping them from you. They are going to give it back to you over time once you reach your full retirement age.
That's right.
A lot of people do not want to have that happen. Again, not the end of the world. But if you don't want them to dock any of your Social Security benefits because you have earned income, at 67, your full retirement age, you no longer have to worry about that. So you could go back to work, still receive your Social Security benefits, and it doesn't matter how much you make. I think the number was around 22,000.
22,800.
Yeah, somewhere in there. If you made more than that, they were going to dock some of your Social Security. Now, once you reach full retirement age, you've had that birthday.
Yep.
Congratulations. You no longer have to worry about the earnings test is what they call it.
All right. So we talked about our full retirement age for Social Security. Next significant birthday we have comes 3 years later at age 70. And what happens at 70?
Okay. So at age 70, we talked earlier, I said that one of these two dates that you do not want to forget is your age 65 when you file for Medicare, because that's going to cost you dearly. The other one that I don't want you to forget, put it on your calendar on your phone and put a reminder on there for 3 months before this. When you turn 70, that is when the delayed credits for Social Security stop. What do I mean by that? Every month, well, we'll say it the easy way first. Every year that you don't file for Social Security between your full retirement age and age 70, your benefits go up 8%, roughly.
8% per year. Yep.
To say that more accurately is every month that you don't file for Social Security, your benefits go up 1/12 of 8%, because it's not on a year-by-year basis, it's on a monthly basis. But that 8%, that's a good investment. That's a good return of your money. There's probably no other guaranteed investment out there of 8%. And you're not taking any risk. So it can behoove you in a lot of cases to delay your Social Security filing for that reason.
Yep.
But at age 70, that stops.
It does.
They are no longer giving you delayed credits. So if you don't file for Social Security at age 70, there is zero benefit for you to wait any longer. You could wait until 72 and say, okay, now I'm ready to file for Social Security.
Yep.
Well, congratulations, you just lost 2 years of Social Security. They are not going to give you in arrears.
Yep, they're not going to reimburse you at all.
Yeah.
Nope.
So that's another one. Put that one on your calendar along with the Medicare age 65 benefit.
Okay. And then for those of you who are charitably minded, perhaps out there, we have another significant birthday, age 70 and a half.
Only 6 months later.
That's right.
I have another birthday, age 70 and a half. And this is one that, again, I said earlier that the age 55 rule falls under a lot of people's radar. This is another one that falls under beyond somebody's radar. And so at 70 and a half, you are now eligible by the IRS to do what are called qualified charitable distributions.
Yep.
What that means is, in the past, when you started taking out R&Ds, the government said, we understand you might not want to take these required minimum distributions out and you don't want the taxable event. If you give this money over to a charity, we're not going to make it a taxable event for you. So that means if you're required minimum distribution age and that $50,000 check comes to you because the government forced you to take a distribution from your IRA, and you deposit that, that's a taxable event. You now have $50,000 additional dollars that you have to pay taxes on for that year. Mm-hmm. And you might not want those IRA distributions. You might say, I would just assume not taking it. I want to leave it all in there. Government's not going to let you do that. What they will let you do is, if you have that check written not to you, but to your qualified charity. Yep. So let's call it the SPCA. Instead of that government writing it to Joe Client, they're now going to write the check to SPCA.
Okay.
And you got to get the address of where it goes and their routing number and all that, their business number. Once that check goes to them, you've now taken care of your RMD.
Yep.
But you know it's no longer a taxable event.
That's right. And you can start basically giving to your charity of choice without having a taxable event to yourself from your retirement accounts.
Exactly.
Effectively.
Exactly.
And then our last significant birthday, which they changed just recently here.
A couple of times.
Age 73.
Yeah.
So when they passed Secure Act 2.0 back during the COVID years, back in 2020, they increased our required minimum distribution age. Like Brice alluded to, in the past, it was age 70 and a half.
Yeah.
Basically out of your 401ks and your traditional IRAs, whether you wanted to or not. When you hit 70 and a half, you were forced to take a certain amount out. That was a taxable event. They upped that to age 73. So now you no longer have to do that until you're 73 years old. But once you turn 73, whether you want the money or not, and you have money in your traditional 401ks and IRAs, you have to take a certain percentage of that IRA out as to hit your bank account, which of course triggers the taxable event.
Right. And so you heard us on the last birthday, age 70 and a half, that I was talking about R&Ds. And you might have said to yourself, well, wait a minute, R&Ds that doesn't come into the picture until 73. You're right. But as Garrett said, a few years ago, it was 70 and a half was your R&D age.
It was.
What is the funny thing? When the government came out with that Secure Act and Secure Act 2.0 and said, we're changing your R&D age from 70 and a half to 72, and then they changed it to 73. They forgot about QCDs. I'm sure they forgot about it. I'm sure this was not an intelligent thing that they did.
No.
They forgot that qualified charitable distributions were designed to sync up
with
when you were forced to take out R&Ds. So when they moved the R&D age to 73, they forgot to move that QCD age also to 73. So that's why we have that extra birthday in there now. We didn't used to have, this is 9 birthdays we're going over. Used to be there were only 8. Now there's not.
Absolutely. Well, Brice, I think after 9 birthdays, I think we've covered the list.
So after 73, and by the way, they are going to change that to 75 a few years from now. I forget when it is.
I think it's 2033.
So in a few years, we're going to change that to 75. So it might not even affect you at 73. But that's it. Once you get to that age, no more retirement birthdays. Congratulations. Now you can relax.
All right. Excellent.
All right. Well, that's going to wrap it up for this episode of The Vault. Again, I'll bring your attention to these like and subscribe buttons down below the screen there. Click on those if you want to catch future episodes of The Vault with Doug, Garrett, and myself. For the Wealth Guardians, I'm Brice Payne.
And I'm Garrett Ray.
And this has been The Vault.